Are student loans really worth it? Let's say you've decided that you really want to pursue education, but you're kind of unsure about the cost of it and how you're going to pay for it, whether or not that cost is really worth it. You might already have the money saved up to pay for your degree or your education. If so, awesome. Most people, though, don't have that. And so you might need to borrow student loans. And so is that a good idea, or will that hamstring you for years? This video, we're going to show you the 3 reasons people really decide it's worth it to pursue a new degree program. And we're going to show you about student debt, if it's good or bad, and how to turn bad debt into good debt, as well as a rule of thumb that you can use to calculate whether or not going into a specific degree program is a good decision or not. So first, is college worth the debt? There's 3 good reasons I think that you could say that the answer would be yes. So first, will it give you a career boost? You might say be in an assistant role or an assisting role, or you might not be the head person in your office. You might want that position, in which case you might very well need to pursue a professional degree to get to your terminal degree status so you can rise to the top position in your field. If that's the case, that might be something that you really want, and if that is something that you really want, you might need to go ahead and pursue the degree, even if it's kind of expensive. We'll show you how to make that a good financial decision regardless of what the debt you have is, but a lot of people will pursue a degree program simply because they want to either make a career change or they want to advance to the top position in their career, or at least a higher position than they're currently at. And will that guarantee you that position if you have a higher degree? Of course not, but it will certainly remove any barriers that might be in your way. So number 2 reason why you could say that college would be worth the student loan debt is fulfillment. Some people find fulfillment in doing a specific role. I'll tell you a personal story. I have a friend who's financially independent who doesn't really need to do anything specifically financially because she's already making plenty of money from her other side interests and business projects, but she's going back to school to become a labor and delivery nurse. And why is she doing that? It's because she feels like that's a calling in her life right now. She feels like she could add tremendous value to patients, to make their experience a special one, and to just be there for people in their time of need. And what a wonderful thing, right? So a lot of times people make decisions about what degree programs they want to pursue, not for financial reasons, but because you feel called to it. You feel like it would lead to fulfillment. And if you think about the Maslow's hierarchy of needs, the number 1 need is self-actualization, which is making you feel like your skills and knowledge are being used in the best way possible, right? So that's the second reason why you would say that college and student loans would be worth it. Number 3 is, are the earnings you're going to get from the degree justifying the cost of that degree? So the third reason would just simply be a financial, cold-hearted, ruthlessly mathematical answer. Is the higher earnings you're going to get enough to pay back the debt? Yes or no? Now, for most people, that's going to be a resounding yes. If you just look at college graduates versus non-college graduates, the stat that's usually reported is that college grads earn, as much as $1 million or more over the lifetime of their careers than somebody who doesn't have a college degree. So does that cover the cost of even an expensive college? Yeah, it does. Now, granted, that doesn't really, say if that person could have made a lot of money even without going to college, right? There's a little bit of a self-selection bias problem. But what about a professional degree versus a bachelor's degree? From a mathematical standpoint, if student loans are worth it would simply be looking at the cost and seeing, are your earnings going to be enough to pay for that? So let's talk about whether or not student loan debt is good debt or bad debt. So what we would say is, first off, is there such a thing as good debt? Yes, there is such a thing as good debt if it allows you to become something where you make a lot more money than if you hadn't pursued that, and the amount of debt that you have is less than what your earnings will be after graduation. If you're going to earn more than the debt that you have after graduation, then certainly that student debt is definitely good debt because it allowed you to earn a lot more money than if you had not pursued that degree at all. So yes, student loans can be good debt. Now, when is it bad debt? Under traditional metrics, student loan debt would be considered bad debt if your student debt is larger than your earnings. Now, for some people like resident physicians or resident dentists, you would really want to compare your student loan debt burden to what your salary is once you're fully practicing and making a full income, right? But in general, you would consider a bachelor's or a professional degree worth it if your total debt is going to be less than your earnings. Now, that's with traditional metrics. And I told you earlier in this video, I was going to show you how to make bad debt into good debt for student debt. So the way you would do this is if you do owe more than your earnings, you can look into loan forgiveness programs and pay 10% of your income, and then even set aside a little bit into an investment account to cover any future liabilities with taxed student loan forgiveness, which we don't know whether or not that's actually going to happen, right? For public service loan forgiveness, the 10-year forgiveness program for people working for a government or nonprofit employer, that forgiveness is 10 years and it's tax-free. In the private sector, it's 20 years generally, and it's probably going to be taxed. Maybe. It's still uncertain. The jury's out as to whether or not they're actually going to assess taxes on student loan forgiveness. But in general, how do you take a bad debt for student debt and turn it into a good debt? Well, remember, credit cards and auto loans and mortgages, you can't pay 10% of your income on those. Student loans are the only kind of debt where you can pay a percentage of your income and then it's gone without any negative impact to your credit score in 10 to 20 years. That's a big deal. It doesn't mean that everyone that has more debt than income should pursue a loan forgiveness strategy. Far from it. I'm simply saying that a lot of people could benefit from a strategy like that so that they could keep their payments down to a manageable level and make it so that the student loan debt doesn't need to get in the way of them achieving what they want to achieve in life. Here's a quick rule of thumb for you. If you take 10 to 20% off of your income after you get your degree, how much money will you be left over with? Take that income and compare it to the income you would have had without pursuing that degree. If that net income number after subtracting 10 to 20% of your income is higher than what you would have earned without that degree that you pursued, then that degree was a good decision and the student loans were worth it. And that's because, remember the math, if you owe less than what you earn, it was a good decision financially. If you owe more than what you earn with this degree that you're getting, then you can pay it on an income-based plan, right? So if you take away 20% off of your expected earnings, that's going to account for your income-based payments and for any savings and brokerage accounts needed for paying taxes on forgiven student loan debt in a worst-case scenario. So for example, let's say you're a dentist who borrows $400,000 to go to dental school. You graduate and earn $120,000 a year. If you take away 20% off of that $120K income, that's a $24,000 hit. So you would be left with $96,000 after accounting for 20% off for the student loans that's being claimed for the income-based payments and saving for the taxes. So is $96,000 more or less than what you would earn if you had simply pursued a bachelor's degree for your undergrad and that's it? If you say you would make $50,000 or $60,000 in undergrad with not an easy upside, by the way, to having your own business and having a guaranteed stream of income like with dentists becoming practice owners, you can actually see pretty quickly how becoming a dentist is worth that student loan debt, because that net income, after accounting for the income-based hit that you'll take on your student loans, that net income is still much higher than what you would have made without that specific degree. If you're a bachelor's degree holder, let's say you would borrow $30,000 and you'll make $60,000. Compare that $60,000 income to what you'd make with a high school degree, $30,000 or $40,000, let's say. That's clearly still worth it. So, really, if you look at most degrees are worth it because of the nuances of income-driven repayment. So if you decide that your student loans are definitely worth it, check out now our next video about what student loans can be used for.